Hello investors, welcome back to the Trend Trader channel. As you know, we started giving you update on our dividend portfolio. So now you'll be seeing more of these videos because the companies, they come and go. We've already said in the past that we will be promoting some companies from our stocks that we have in our portfolio, promoting them to the dividend portfolio, or even demoting some of those companies. So this week we already demoted one company out of the dividend portfolio. So we've been holding this company for quite some time. Basically, in 2021, that company didn't move a lot in terms of the share price, but in the end, we ended up receiving a very good dividend from it. That company is Redefine. So now this week, Redefine closed below a key support level. So for that reason, we decided that we are going to part ways with Redefine. So until Redefine come back above this key level, we will not be having Redefine. It's not in our dividend portfolio. It's not even on our EasyEquities portfolio. Remember, we want to buy the best companies. By best, we mean that we want to buy companies that has higher probability to move up. That is based on technical analysis. It is not based on the fundamental analysis of the business. We are not buying good companies according to fundamental analysis approach. We are buying stocks that have the best chart setups, and then also we look at whether that company pays dividend or that company doesn't pay dividend. We do have companies that have good chart setups, but those companies they don't pay dividends. As you saw in the previous video, we said that we are buying Sasol because Sasol gave us a best chart setup. Even though Sasol has a 0% dividend yield, it means that in the past 12 months, Sasol didn't pay a dividend. We know that the interim results for Sasol are coming in February 2022. So we will see what the management is going to tell us about the performance of Sasol. Well, we don't want to have a lot of expectations because that is the cause of disappointment. But what we would like to see from Sasol, we would like to see Sasol to continue to be profitable, to generate large revenue, so that after paying everything, the business can be profitable. We also like to see Sasol growing those earnings per share, because it means that the shares that we own are earning us money, irrespective of whether Sasol pays a dividend or not. But obviously, we would like to see Sasol resume that dividend payment so that we can start receiving cash from our investment, right? So now, like I said, we decided to part ways with Redefine. You will see when we do the chart analysis of Redefine why we decided to sell Redefine. We will also tell you about the company that we added into our dividend portfolio and why we added that company, and then also we'll go through the chart of that particular company. We'll also share with you where did we take that Redefine money, where did we invest it, and why we invested it in those companies. So make sure that you sit, you relax. We saw that recently now we started, whenever we talk about companies, we'll go to the company website, we'll try to give you a brief description of what the business does. We go to the financial statements if we do find the financial statements of those particular companies, and then we look at those financial statements with you. We try to find information that could be useful to us so that we can make an informed decision whenever we buy a particular company. Once we've done that, we go to the chart of that company to look at the chart to see where can we find a good area that will provide us with less risk. Remember, we cannot run away from risk whenever we're investing, but we can manage that risk by either investing just enough amount of money so that if the market move against us, we don't lose a lot of our capital, or we find an area where the market, if it reverses, we also exit with a small loss. We always take our stop losses. We always use a stop loss whenever we make an investment. We don't invest and then just forget about that, because if the market reverses, or that particular share price, if it reverses, we want to limit the amount of drawdown we have in that particular company. Risk management, it's part of our strategy. It is the key component of our strategy. Our strategy is not just about choosing companies to buy and hold. Our strategy is about ensuring that whatever company we are buying, we minimize the loss that we can take from that particular company, because as we always say, risk is inherent in the market. You cannot run away from it. If you don't want risk, then you don't have to invest. And also, if you want to know more about our investing approach, make sure that you check in the description below. We've got an ebook called the Dividend Manifesto. You can buy that ebook on Gumroad. It's available in different formats. There's PDF format, there's EPUB format, and there are other content that comes with that ebook. So make sure that you go and check it out on Gumroad so that you understand how we find these companies. So for now, let's go to the websites to find the information of the companies that we recently sold and the companies that we recently bought, and then see how our dividend portfolio has performed in the past, in the recent weeks, and then also look at the new asset allocation or capital allocation, where we're investing, where we have large positions and where we have smaller positions. And also, if you like the new format that we are using whenever we do analysis, it doesn't matter whether we're talking about stocks that we are trading or we're talking about stocks that we're adding into our dividend portfolio. So the new format, like I said, we go through each company's website, we find some information, then we look at the financial statements, and then we look at the chart. Let us know if you like this new format that we are doing. Remember, in the past, we were just talking more about technical analysis. We were looking at the chart, but we saw that some people have a difficulty in terms of understanding technical analysis. So now we're trying to accommodate everyone so that you have an idea of the company that we're investing in. And remember, if you haven't subscribed, please consider subscribing. If you enjoyed the content of this video, make sure that you give this video a thumbs up. If you know anyone that can benefit from this video, feel free to share with anyone that you would like to share the video with. And also, if you have questions, comments, suggestions, even complaints, make sure that you leave them in the comment section. We always attend to those. So let's just go there. All right, as we mentioned there in the introduction, we said that we have this ebook. So if you go to Gumroad, this is the ebook that you're going to find there. The name of the ebook is called the Dividend Manifesto. So it's a technical analysis approach to dividend investing. We know people, they like to invest for dividends. So in this book, we define how to identify high momentum dividend paying stocks from different exchanges. We trade stocks from the GSE, but we also trade stocks from the US market. Then you can see how you can ride the bull market and then be able to sell before the market crash. As we saw that the US market is currently struggling, some of the indices have already failed there. And one thing that we are crucial on is risk and money management, so that you can always be able to manage risk accordingly. Some of our positions have returned over 50%, including dividends that we've been collecting from the companies that we invest in. We also show a proof of concept of how we took some of the trades using this approach, how we made money from those trades, and also how we were able to manage risk. And then we have a brief achievement based on what we did in 2021 using this strategy. As you can see, we're able to grow our capital by about 58.16%. So in a nutshell, we are selling you something that we know that it works. It's tried and tested in the market. Like we mentioned, this ebook has about 27 pages. It's available in PDF and EPUB format. When you buy the book, you get both format, so you can read it in whatever format you want. And then we have a risk management worksheet that you can use on Excel. We show you on the videos how to use that worksheet. We also show you how to set up the charts using TradingView. And also, because sometimes it takes some time to scan for stocks, so we also show you how you can use a stock screener on TradingView so that you can shorten that process. And once you bought the book, remember on Gumroad, when you buy something, you use your email address, so then you become part of our customer on the customer mailing list. Every weekend we send a weekly newsletter to our customers, but we also send a weekly newsletter to people who follow our Gumroad profile there, because we also want to communicate with those people to keep them in the loop what we are trading and what other products are coming in the pipeline. But we send exclusive emails to our customers. We don't send everything to our followers. So like we said, the ebook, it costs $25. That's the option to buy, but also there's an option to rent it for $15. But we recommend that you just buy the ebook so that you can have it forever, so that you don't have that 30 days limitation that you'll get if you decide to rent the book, right? So like we said, the name of the book is the Dividend Manifesto. It's available on the link in the description, and then you can buy it there on Gumroad. You can use your card, bank debit or credit card, but you can also pay with a PayPal account. So make sure that you get yourself that book so that you understand how to identify companies that can make us some money in the stock market. Right. Now let's go to Redefine. Remember, we said that we have exited our Redefine position, but for those that don't know what is Redefine, Redefine is a real estate investment trust. They invest in commercial and residential properties, but mostly commercial properties. So they have a property asset portfolio that is worth over 73 billion, which is good. But the problem with a real estate investment trust, most of these investment are leveraged, meaning that they are funded by debt. So depending on how the company performs, sometimes they struggle to pay some of that debt that is due at whatever period. And then also, before they make distributions, they need to do what is called the liquidity test. Then they can be able to determine if they will be making distributions. Remember, real estate investment trust, by regulation, they're supposed to pay about 75% of the income that they collect. So in this case, the income is coming from the rent. Last year in 2021, like I said, we held a Redefine since 2020 or early 2021. But in the interim period, they didn't pay a dividend because they couldn't pass that liquidity test. We kept on holding. Then in the last final result, they declared the dividend of about 60 cents per share that we were holding. So we got a nice dividend. The dividend yield was high because the share price is low. Remember, we have a video where we speak about the dividend yield and the relationship it has with the share price. So low share price, a reasonable dividend resulting to a high dividend yield, but that does not necessarily mean that the company is a good company, right? So now that you have a brief understanding of what Redefine stands for, so let's look at the chart of Redefine and why we exited that position, right? So like I said, we bought Redefine, so that was just before the end of 2020 when the share price closed above the 200-day moving average. As you can see, then the share price, it just moved sideways there. It never really went up that much. There was a time where it attempted to trade above 5 rand per share before pulling back. That was after they declared that distribution of 60 cents per share. So we're okay holding Redefine as long as it remained above the 200-day moving average, of which then it started to make this bearish flag there, and then eventually it broke below this level. So when it broke, we saw that it closed below this level yesterday, the 21st of January 2021, and it did that on a reasonable amount of volume. So we decided to exit that position. So we sold all our Redefine. We started by selling half to add into our Anglo position. But then yesterday, when we saw that it was going to end the week in red, we just sold everything there so that to make sure that we don't lose a lot of money there. As you can see, if we zoom in a bit, you can see that it closed below this support level there. So we're not saying that Redefine is now a bad company. We are just saying that we no longer have a position there on Redefine. But if the share price of Redefine come back above this level, then we will buy Redefine and then continue to hold it in anticipating that the share price can continue to trade high. But at the moment, we no longer have a position there on Redefine, right? So we mentioned that we bought a new company, but I will cover that company in the end. Some of the proceeds that we got from Redefine, we use that money to add into our Pepkor position. Remember, we spoke about Pepkor in the past. Pepkor is a retail company. They sell a lot of things, including clothes, but they're also there in the electronic space in the form of F.I.R.E Corporation. right? We spoke about the revenue. The company had a revenue of 63 billion, and then they have about a profit of about 6.5 billion, right? So what was interesting about Pepkor is that Pepkor has declared the dividend. The dividend is coming this coming Monday. I just want to see the date, what's going to be Monday. So I think it's going to be the 24th. Yes, Monday is going to be 24th January 2022. So that's when the dividend is coming. The date is already past the last day to trade in order to qualify for dividends. So by Monday morning, the dividend will be in already. But at least you have an understanding of what Pepkor does. And also remember that Steinhoff owns 80% of Pepkor. So if you are a Pepkor investor and also you are a Steinhoff investor, just pay attention there, because it means now that you are overly concentrated into this company. You need to decide whether you want to own Pepkor on its own, or you want to hold Pepkor via Steinhoff then. So do keep that in mind. So now the reason for adding on Pepkor is because we've been holding this company for a while, and then it's showing some signs that it's moving up. So basically, we've been holding Pepkor since it was trading at around 12 rand per share. So we've really made a good coin out of this company. As you can see, at this moment, it's currently trading at about 23 rand 90 cent. So this is where we entered. So we made that just over 60% in this position, the original position. Remember, we keep on adding whenever the company forms a nice technical setup, but the original position is up by over 60%, right? So the reason for buying now, we saw that Pepkor broke above this level, we added, but it couldn't go beyond 28 rand per share. It came back to this level, finding the support near the 200-day moving average there. So then remember, when we always look for a bounce there, we saw that bounce and that volume, then the share price started to continue to move further up there, right? But we didn't want to just jump in, because we already had a reasonable position there. So we're waiting for the share price to come back above the 50-day moving average. We saw that it came back above the 50-day moving average there on that candle, but we didn't took the trade because we had our capital committed into other positions. So when Redefine started to show signs of weakness, then that is when we decided that, okay, this is it. We are selling our Redefine position, and then we're adding into our Pepkor position. So we added Pepkor yesterday at around 20.70 or so per share, and our stop loss is just close below the 50-day moving average, meaning that if the share price reverses and it breaks below this level, then we are going to exit our recent addition. But also that is now our new stop loss. Every time the market goes up, consolidate, and then break above, we normally take that buy, we set a new stop loss, another consolidation, and then followed by a breakout, we take a new position, we adjust our stop. So whatever that we bought here, the new stop is going to be here. So that when the market reverse, we only lose money on the recent addition, but we lock the profit that we made from the previous buy. So that is how we do risk and money management there, to ensure that if we are on the right side of the market, meaning that the market is moving up and we are making profit from that position, we are able to maximize the amount of profit that we can get there. But also at the same time, if the market move against us, we are able to limit our loss there in that particular position. So like I said, Monday we'll be receiving a dividend. I think it's about 44 cents per share. That is the gross dividend. So after the net, it's going to be somewhere between 36 cents and 38 cents per share. So that's the amount of money that we'll be receiving from Redefine. Next time we make a video, we'll show you how much money we got from that position based on the number of shares that we are holding. So now we don't have a target on Redefine. We're going to ride this position as long as it continues to go up. But also we have what we consider to be a swing trade position. A swing trade basically is when we are trying to trade a pullback. In this case, you see that, okay, let me just show you. The share price can go up and then it starts to consolidate. Instead of breaking above, rather what it does is that it breaks lower. Depending on what's in there, in this case, we have the moving average. The share price can find the support at the moving average. And then if it does find the support there, it rejects the lower prices and then it starts to trade high. Once to see that the share price has found support there, we normally buy there at that whatever closing price, and then we have a stop loss just below that moving average. So our target, what we anticipate is that the share price is going to continue to trade higher and reach that previous high there. So we do that, we call it swing trading. What we like to see is that at least the risk that we are taking, which is normally minus 1R, we need to see at least a plus 2R there, so that the reward, the potential reward, is twice the amount of the risk that you are taking. And also remember that if the stock is on an uptrend, we're not saying that it is guaranteed. We're always looking for high probability setups. Trading is a game of probability, not nothing's guaranteed. Be worried if you hear someone saying that the stock is going to or the stock will. We don't use those words. What we'd like to see is for the stock to continue to move up, but if it doesn't move up, we can just easily cut our losses there. So some part of that position is also a swing trade. The benefit of swing trades is that we can easily make some cash, and then we can use that cash to invest in other opportunities, right? Especially if you already have a large position, like we have a large position on Pepkor. We don't want a position that is greater than 12.5% of our capital committed into a single position. So once we reach that target, we reduce our position so that we bring it back to about 12.5%, and when we use that capital to invest in our capitals, in other opportunities. Remember, what we're trying to do is to compound our returns. So when we make money, that money, it needs to consistently keep on working for us, and that's the only way that we can achieve a super performance in the stock. But if you hold Pepkor for a very long time, yes, Pepkor can grow and become a multi-bagger, but at the same time, that is not how you easily compound your gains in the market. But that is from a trading perspective. Other people might have a different opinion, which is fine, right? So like I said, we added onto Pepkor. This was just an addition there. It's not a big deal that we added into this position, but I just wanted to bring you up to speed on how or on why we added onto Pepkor after we sold some of our position or all of our position from Redefine. Then the new addition to our portfolio is Anglo-American. So there's a reason why we bought Anglo-American. For those who do not know what is Anglo-American, so Anglo-American is a mining giant, own different kinds of mining companies in different sectors. As you see here, they produce diamonds, copper, PGMs or platinum group metals, and then they also have iron ore in the form of Kumba iron ore. Then they have metallurgical coal for steel making, and they're also there in the nickel space, and then different kinds of other products that they have there. So I'm just trying to see this page. Yeah, so this is where the summary. They have diamonds, copper, PGMs, iron ore, nickel and manganese. They also have the metallurgical coal, and then they have a polyhalite there. You can find that information at angloamerican.com. Then you can read a bit more on Anglo-American, right? So we're gonna be looking at the financials of Anglo-American. These are the recent half-year result, meaning that it's interim result for the year 2021. So we have already downloaded just the one-page summary of those results. So what they say that the strong demand of their product resulted in earnings before interest, tax, depreciation and amortization. Well, it depends how you want to call this acronym. Some people, they call it EBITDA. They just omit that T for some reason. Remember, I'm not a native English speaker, but that strong demand, it helped them to have an EBITDA of about 12.1 billion US dollars. In rands, that's a lot of money, so which is good. Like any other company, they also experience challenges due to coronavirus disease there. But the highlight of these results is that their EBITDA is up by 12.1%, which is, 12.1 billion US dollars. Compared to the previous year, it's an increase of 262% year on year. So this is just a great set of results. And then their debt is about 2 billion. As you can see, their debt is just a fraction, a small fraction of their EBITDA there. right? And then they have a free cash flow. When there's an asterisk, it means that there are a lot of adjustments that they have been done. Remember, some of you guys are accountants. I'm not an accountant, but what you can see is that there's a nice cash flow of about 5.4 billion US dollars. And then for dividends, remember, we are buying these companies so that, among other things, we can receive dividends. We saw that they paid a dividend of about 2.1 billion, which equates to about $1.71 per share. At that time last year, I think the rand was trading below 15 rand per share. So that is about 24 rand per share. That people received last year. And then in addition to those returns, they paid a 50% special dividend, and then there was a 50% share buyback. So let me just talk a bit about the share buyback. Remember, the company issue a lot of shares in the market. People trade those shares, but if the company has made a profit, they can decide, they can take that profit and give it to the investors, the shareholders, in the form of a dividend. Sometimes they can give it in the form of a special dividend. So that brings back the money into the investor's pocket. But another way to increase the value of those shares is to buy some of the shares from the market, especially if the management of that company, they feel like the market is not appreciating those shares, meaning that those shares are selling at a low price. Then the company can use that cash to buy back those shares, and then they scrap them from the share list, meaning that the shares that still exist in the market, now they have a higher value. So whenever a company report result and maybe they don't pay dividend, they do a share buyback. As much as we would like to receive that cash into our pocket, share buybacks are a good thing. What is not good is right offers. But even with right offers, we need to understand why a company is doing a right offer. If a company is doing a right offer to pay some debt, that will also increase the value of the share. But if a company is just doing a right offer so that they can pay management, I know that's a bad example, worst case scenario. So that is not a right offer. Recently, there was some talk about Tongat. It seems like there was a bit of fraud that was going on at Tongat Hewlett. Now the company wants to do a write-off. In my opinion, that is not a good write-off because it's not benefiting the investors. It seems like that write-off still wants to benefit the people that participated in the fraud in the past. But that is just a story of another day, right? Back to Anglo-American result, we see that they did a special dividend. We do love special dividends. Sometimes they are larger than the typical ordinary dividend there, right? We're not going to touch about the foundation, but remember that some companies are involved in ESG, which is more about environmental, social, I think the other G is for government, but meaning that the companies are giving back to the communities where they operate their businesses, right? So we're not going to cover the production of this company, but at glance we can see that Anglo-American is a company that is performing very well. It's a company that I would like to have in my portfolio, right? Initially, I wasn't planning to buy Anglo-American. The company that I was interested in was Kumba Iron Ore. Remember, I trade stocks using technical analysis. So I got a buy signal for Kumba Iron Ore. So basically, I will just walk you through this signal. As you can see, Kumba Iron Ore has been on a nice uptrend there, reaching about 800 rand per share. Before it crashed, it came back to the 200-day moving average. It failed to find support, and then it started to crash here. As you see, it came back to these previous support levels, finding support there. Also, the iron ore was also crashing a bit. So what you saw there, the share price of Kumba Iron Ore started to come back to approach the 200-day moving average. So what we're waiting to see at this level, we wanted to see if this level is going to act as a resistance level. So if it acted like a resistance level, then Kumba was going to fail to close above this level, meaning that it was going to start then to fall and then coming all the way down. I do not short sell stocks. I used to short them in the past, but if it did that, I would have shorted Kumba with a stop loss somewhere around here, targeting this previous low there. So that now, meaning that I'll be selling the shares from the market and then buying them at this level to give back the broker the shares that I would have borrowed and sold at the market. It made money. Short selling, it sounds sophisticated, but it is not. If you understand buying shares, it's just the opposite of buying shares. It's just that it's a bit tricky, because while you are holding the short position, the company can also pay dividend, meaning that your broker is going to take more money from your account, because they would be entitled to the dividend if they haven't lent you their shares, right? So the good news for the shareholders of Kumba Iron Ore is that it was able to break above this level. So now as it break above this level, remember in that I said that we always target the previous high there, and then my stop loss is going to be on this weekly. This is where on a weekly time frame there. So this is the last week candle. That is where my stop is at. What I'm anticipating is that the share price is going to trade higher until it reaches the previous high of 790 Rand per share. I don't know how long that is going to happen. Also, it's not guaranteed that it's going to happen. That is why I always have a stop loss. So sometimes when we share these trades either on TikTok, or we're sending a weekly communication, or we share these trades on Telegram, people then they start to say, okay, I bought this XYZ company that we're talking about. What do I do? Please do pay attention whenever I'm talking about whether I'm buying or selling something. Okay, I always talk about buying something. I always have a stop loss. So the share price is now currently trading at 545 Rand per share. If the share price drops, it does not go to 790, it goes to 450 Rand per share. Once it's below 450 Rand per share, just assume that I've already exited that position. I won't make a video to say, okay, remember we said we are buying a Kumba Iron Ore, now we are exiting a Kumba Iron Ore. No, just as long as I give the stop loss level, know that if the stop loss is hit, it means that I no longer have a position in that particular company, right? So now we got this buy signal from Kumba Iron Ore, and then we took a small swing trade there. But also before Kumba Iron Ore, we also got a buy signal from Anglo-Gold Ashanti. So we didn't buy Anglo-Gold Ashanti in the EasyEquities South African rand, but it's the same thinking. The share price has been falling, and then the share price found a support here. It came above the 200-day moving average. We've been really trying to buy this, but also the price of gold has been recovering. Well, we don't know the reason for it recovering. It could be because the US market is weakening, but it doesn't matter. We don't look for reasons why to buy. We look for buy signals, and then we buy. So what happened? The share price broke above this level, tried to trade a bit higher, came back to retest the breakout level. So now we are expecting Anglo-Gold Ashanti to continue to trade high. Well, we're not saying that it's going to reach the previous level of 600 Rand per share, but it would be nice if it does that. Then we have our stop loss somewhere around 275 Rand per share. And then we're going to hold this position for as long as it's playing like this. But remember, this is the Anglo-Gold Ashanti in the Johannesburg Security Exchange there. We didn't have money to take this position, so we ended up buying Anglo-Gold Ashanti into our eToro account. I have an eToro account. I also trade US stocks a lot in that eToro account. It's there in my description. You will find my eToro account in the description below. And then because eToro allows people to be able to see what you are trading, then if you go to that account, it will take you to my, if you use that link, it will take you to my eToro account. You can see all the stocks, the percentages. You won't see how much I bought, but you will see the percentage that is allocated to each particular company there. I also do a lot of stock analysis on eToro. eToro is more like Facebook, but for trading stocks. So I can post charts, I can write comments there. I can also put in a bit of videos. So if you trade the US stocks and you would like to follow my trades, you can then choose to follow me there on eToro, so that you can see whenever I do all this analysis, right? So the setup is still the same, Anglo-Gold Ashanti in the New York Security Exchange, just as it is in the Johannesburg Security Exchange. The plan is still the same. What has changed is the currency that you are using there. Now we are in US dollars, we are no longer in rands. So I entered it around about $21 or so, or $20.80, and then my stop loss is just around $18.22. My target is that high there, the previous high, which is about $38. So if you look at the risk to reward, that is 1:6 risk to reward. If this trade works, it's going to pay us very well, but if it doesn't work, then well. So basically, to put things into perspective, for every R1 that we are risking on this trade, we're expecting to make a R6.50 from that particular trade. That is why you always speak of a risk to reward. You see, as I'm talking about this company, I'm not saying anything about a company being a good company or talking about management. All of that is part of fundamental analysis. I use technical analysis to trade. The story for me, it comes from the chart. Well, it does not always work, and that is why we always have that stop loss there. So after seeing that we're getting buy signals from the Anglo companies, then I said, okay, fine. Instead of buying Kumba iron ore, which only specializes in iron ore product, and then Anglo-Gold specializes in gold, why can't I find a diversified company that does different product? As you already said that Anglo-American as a group, they produce diamonds, copper, iron ore, PGMs, coal, and nickel and manganese. That is when I went there. Now I looked at the chart of AGL, which is the Anglo-American PLC, which is now the group. The good thing that I found on this was that the share price, as you can see, is on a nice steady uptrend there. It's been making a lot of highs, breaking above those highs. We see now it broke above this recent resistance level. The 200-day moving average is pointing nicely up there. And then we got this breakout. You see, if you look at this breakout, you see that it has a nice above normal volume there. So we are happy to buy this Anglo-American into our dividend portfolio, but the other smaller subsidiaries of Anglo-American, we have them in our trading account. I mean, it's still the same account, but it's not added into the dividend portfolio. So now we decided to add the holding company into the into the dividend portfolio. But now, as you can see, let's just do a quick technical analysis there. Why we bought this thing, I just want to zoom in a bit. As you can see, like we said, that we're looking at this resistance level, the share price, it tried several times to break above around 670 Rand or 675 Rand per share. With sometimes those breakout, they failed, but it kept on finding support on the moving average. Remember, when you trade, you can have a solid support and resistance. So this would be the resistance, the top part, and the support level there. The price can bounce up and down between this and either break above the resistance level to show that the market is going up, or it can break below this level to show that the price is going further down. But also the moving average, they do provide a support level. We call them dynamic support level. The price, several times it can find a support level there. The best support level is like here when the moving average is pointing upwards. If the moving average is flat like we see here, then we tend to worry a bit. But the nice thing with what we see here, you see now the moving average is pointing up, which is good. It's a good sign that there's a potential of a continuation of an uptrend. Potential, because it's not guaranteed. If it goes up, great. If it doesn't go up, remember, we always have our stop loss to reduce our risk there. So we entered it around 725 Rand per share, but as you can see now, the share price is still back below this breakout level. Fortunately for now, it hasn't touched our stop loss, so we still have our position there. Right, so now let's go to the dividend portfolio so that you can see what the additions that we've made. We still have F.I.R.E, Remgro, Shoprite as it is, but we reduced our holding from Shoprite a bit because we wanted to add more into our Sasol position. You see now our Sasol is about a 13.34% there. We spoke about the 0% dividend yield because Sasol hasn't paid the dividend there, but the chart, it looks great. We made the video. Make sure that you check that video if you missed it. while we were buying Sasol, we spoke about the price of Brent crude oil. And then now I mentioned that we bought more of Pepkor. So now Pepkor is our third largest holding at 16.75%. So our large holding is still a ShopRite. It came back from just above 20%. Now it's around 18.88%. And then F.I.R.E, it's also 17.2%. And now Pepkor is our third largest holding at 16.7.5%. Right, we are happy with this. It's not based on the company itself, it's based on the chart and how that the chart is performing. And then our new addition here, Anglo-American PLC, we saw on the chart that we are still underwater because the price is below our entry level there. But if you look at it, Anglo-American, it's about 10.36%, and it has a nice dividend yield of 4.98%. So we're going to hold Anglo-American for as long as it's trading above 625 Rand per share and see how far it goes. So that's it. That's the summary that I wanted to give you. Like I said, on Monday, we'll be receiving a dividend from Pepkor. Then we'll update our dividend pipeline there to see how much dividend we have received. So far in January, we have received some distributions from ETFs, but since those do not form part of our dividend portfolio, they are in the tax-free savings account, we don't add them here. But next week, once we have Pepkor, then we will add Pepkor, the dividend that we received from Pepkor. As much as we don't own Redefine, it's always going to sit there because we want to record the dividend that we received from it. So yeah, that's it for today. Don't forget that if you want to understand our approach to the market, how we find dividend paying companies, you can buy the Dividend Manifesto on ebook. It's going to cost you $25. Well, I don't want to estimate that in rands because the rand dollar exchange, it fluctuates all the time, but the price of the ebook is currently selling at 25 US dollars. So thank you everyone for watching our YouTube channel. If you haven't subscribed, we would like to ask you that you consider subscribing. And if you enjoyed this dividend portfolio update, please give this video a thumbs up. We will see you on the next video.